Good afternoon. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the afternoon of Sunday, the 27th of April. My disclaimer: I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not to issue trading signals. Right. I've done quite a few charts today. I've been promising more charts on the grains and so on and so forth, weekly charts to shed more light on the some of the more minor futures and commodities that I do. I've got a load of those I'm adding today. If you've got any requests for more, just ask. And I'll have a look at those, and I may well add them as well. But I've been deepening that because I just want to get a deeper view on quite a lot of these, and really for that you need the full multi-time frame charts. So I've been adding a few of those every weekend, and actually I've added most of the ones I was initially planning to add. All right. Anyway, let's move on. Okay, ES. We've got nice move up here. We haven't reached my trend line targets yet. That is, if these are still bear flags. The political situation is evolving. Obviously, the Trump approval numbers are looking pretty grim. Also, the other thing is, on tariffs, there's been a lot of talk about talks, but I'm not actually seeing any deals announced so far. My suspicion is that while I think the idea was that the response to these tariffs was to be that every nation in the world was trying to suck up to the White House and get special treatment, and and there would be an imperial wave of you can have a concession and you can't have a concession, etc. But actually, I don't think the reaction's been like that at all. And this kind of game show format this tariffs thing has been on hasn't been working. So I think we are looking at a situation where we may find that the Trump administration is going to be far more cautious and reactive to public opinion than it has been in the past. Apart from anything else, because I think just looking as an outsider, but as an outsider who's been studying, the US for a long time. I think a lot of Trump's control of the Republican Party is based on his support in the country and his support in his perceived as being an asset to the electoral chances of representatives, senators, etc. And I think the more unpopular he becomes in the country, and he is breaking some records in terms of low ratings at the moment. The more unpopular he becomes in the country at large, the more he has to worry about his unpopularity, meaning that some of his slim majorities in the House of Representatives, particularly, might get bigger. With more rebellions and people much happier to rebel because they don't feel they feel that they're more in danger of losing their seats from the electorate than they are from Donald Trump and being primaried and so on and so forth. So I think the situation is evolving. We're moving into a situation where Trump, who a few weeks ago didn't seem particularly concerned about what was happening on the stock market, I think actually it may start caring increasingly about that. And that may change the way policy goes, and that in turn could change the way the market goes. So anyway, I'm planning to keep an open mind and watch the situation. I'm not married to any particular scenario, but I would say that's something that's really changed in the last month, and that is potentially very, very important for what we do on the markets over the rest of this year. I am thinking these are likely bear flags forming. I am thinking they're probably going to deliver retests of the lows, or at least a significant move down that results in a sort of a healthy higher low. And I think I don't think it's entirely clear what we're doing here over the next few months is going to be. But I do think an awful lot of damage has already been done. I think damage has been done to economic growth. I think damage has been done to trading relationships. I think damage is being done to trading volumes. I think a lot of industries in which the US has traditionally done very well, for instance, defense. I'm not sure that's going to be continuing to be the case in future. I think there's been US defense has been a very successful exporter, selling across the world. And I think a lot of America's allies are looking at it thinking, do we trust them enough to depend on them for our weapons? And the answer is coming back no. So I think an awful lot of, fighter planes, and particularly things like the Patriot missiles, where allies have been looking for more Patriots and then realised they're not going to get them. Ukraine, but of course Europe as well. And I think they're thinking we don't produce anything like this at the moment, and that needs to change. I think the damage done in the last few months is probably going to mean that most of the Americans' defense exports by volume is going to disappear over the next 5 to 10 years, and that is a problem because, of course, that is, of course, exactly the kind of traditional manufacturing job that really America is trying to bring back. I think Boeing is going to lose ground considerably. It's already lost some big orders in China. It's liable to lose some more worldwide as people pivot away from America and show their anger at the way America has acted over the last few months by a soft boycott, moving away to other suppliers, reducing their dependence on the US as a trading partner because they're not seen as reliable. Anyway, these are bigger picture issues which are slowly developing, but nonetheless need to be borne in mind. Anyway, so in terms of where we are in equities here, we're heading up towards my target trend lines. I still really like my target trend lines, not so much of the ones on the futures, but the ones I've been drawing on the RTH charts. We've got a weak 60-minute sell signal fixed here, and that hasn't failed yet, but it might. On NQ, we've got a weak 60-minute sell signal fixed here too, and that hasn't failed yet, but it might. I'm wondering if those are going to play out into, let's say, tests of the new week pivots next week. We will see how that goes. On RTY, we're getting up towards this declining resistance, but I think we're breaking it already on IWM. We'll have a look at that on the bigger picture charts. No current divergence here. No current divergence on YM, which is still very weak. If you look at the others, EF has made a new rally high. NQ has made a new rally high. RTY has made a new rally high. YM has not. In fact, it's significantly short of a new rally high here. So this is the weakest of the indices here, and that is unusual. Partly, of course, that's probably down to the issues being faced by Boeing. But other areas where there are other areas where a lot of the tourism's drying up this year. People are coming to America less. There's been a lot of press about problems with people at immigration, people being turned back, being forced to turn over their phones and having people look through their histories. There was a French professor who was turned back, who was going to a conference, the customs people, I think, looked through his phone and found some stuff that was not pro-Trump and then refused him entry. I think a lot of people are just thinking it's not worth the risk of going to America. And from Canada, there was at least one or two tourists at least who weren't criminals or anything, have basically been taken into ICE custody for a week or two. Really, tourism is cratering. One of the big exports that US has been very good on is selling education, and of course all the stuff that over student visas and cracking down on the education sector, that's not good for that either. These are actually all big export industries. Tourism is big. Selling education is big. It's defense is big. Tesla was big. There are a lot of areas in which American exports are really not being helped this year, and again, that's going to feed through into a weaker economy. And I think a recession may already have started. Okay, DAX and the STX. The Europeans have been doing considerably better than the US so far this year, and that's because relatively they're much further away from the source of the trouble, which is, of course, the new administration. And the administration, in terms of the tariffs, the country likely to be hurt worst is going to be the US, just for exactly the reason I said, which was that if let's say the US was having a trade dispute with China, that's considerably less than 5% of their overall economy. If they're having a dispute with everybody, then that's going to affect trade across the board, and trade is 24% of the economy across the board. Double that up with problems in the federal government, and lots of people being fired, lots of uncertainty, then that's actually almost half of the US economy. I'd be surprised at this stage if there wasn't a recession. And actually, even if all of these policies were cancelled, rolled back, Trump said, "Oh, well, I was just joking, guys," I think a lot of these problems would remain, and chances are there would be a recession regardless in any case. Okay, ESTX, again, recovering territory pretty well. Going up. Are these bear flags? I'm less convinced of that. But I think they probably are bear flags, or at least bearish patterns, which will deliver in due course a large retracement on the US indices. All right, let's have a look at the bigger picture on that. Okay, SPX. Here is the trend line I drew in. We've made a higher high here. Now, that was actually quite an important higher high because we'd already, with this first rally, basically got back to the 50% retracement of the move. I'm leaning towards saying this is a bear flag, and then either, well, really, the obvious next move is if it does turn out to be a bear flag, and we'll wait and see whether we get a decent trend line on this high, as we got on this high when I called the likely high on the bear flag. If we see that, then we could be starting another leg down. I think I'm definitely open to that possibility, but I am thinking less in terms of an actual crash this year. If the Trump administration becomes more receptive to, more sensitive to what is going on in the background. If they're saying markets go down, we don't care, there will be some pain, then that leaves the options open for a really serious problem to develop without the administration caring much. I think we're moving out of that now. We will see. In terms of the arrows I drew in, we're still following them pretty closely, and I'd like to see another move up, basically another 100 and change handles to get up to this trend line here. Isn't necessarily going to make that, but this is the obvious resistance trend line, and the obvious resistance trend line is the obvious target. We'll see. Okay, looking in terms of the daily middle bands, I was talking about we were likely going to see a break over these, and we've seen a break over these with a confirming close above as well the next day. So that is broken. We've also broken the declining resistance from the high. Looking at the Qs, we've broken declining resistance from the high. Again, a couple of good days above the daily middle band. I'm watching in terms of, let's go back to SPX for a second. What are the big resistance levels above? Well, we've got the 50 DMA, which amazingly, after a move up of this magnitude, is still only at 56.38. We've got the 200 DMA, which is at 57.46. These two levels are levels that I'm watching. If we have a look at where my target is for this trend line here, I've got that in about the 56.70 area and rising. That could be a match really with either. But it's likely to be more of a match with the 200 DMA, which would be a very obvious fail level if we get there and lose it at that point. Okay, looking at the Qs. Qs, we've again got the 50 DMA and the 200 DMA, and they're coming up, and they are interesting targets. We've got some significant resistance at the monthly pivot at 479. Not so much because it's the monthly pivot, just because we've seen a fair amount of activity there. But obviously, all the monthly pivots are only the monthly pivots until the end of this month. On the Qs, I'm looking for a target up in the 484 area, 485, which is a nice level. I'm not seeing any particular reason to think it's not going to make it. Looking at Dia, we've got we haven't seen a break over the daily middle band yet. As I mentioned, this has been the weakest. If we can see that break, then I'm still liking this target above. Really a double target, really. Here at about 412.5, potentially at the cross of declining resistance from the high and this flag resistance I drew in. But if we are going to see that, that would actually happen on Tuesday. So that would require, if we're going to do that at the cross, so that would require really a significant move up on Monday on Dia. We'll see if we get it. All right, let's have a look at IWM. IWM, on the daily chart, we've got a break over the declining resistance, and you can see that on the okay, sorry, I marked that in on the hourly chart. Yeah, you can see that on the 15-minute chart as well. In terms of the daily middle band, we've now seen 3 full days over the daily middle band after a break back above it. That's nice. We've broken the obvious resistance that I was looking for. What are we looking for in a target? Well, if we go to the trend line I marked in, that target would be in the 199 and change area. So we'll see whether we get there, but at the moment I'm not seeing any particular reason to think that we won't. In terms of DAX, we've seen a very nice move over the daily middle band. We're back up testing the 50 DMA at the moment. We're already back over the 200. I'm liking its odds for getting up here. I'm wondering if we might, during this move on the US equities, we might actually see retests on DAX and the STX. On Nikkei, this has been a bit weaker, but we're still back over the daily middle band. We're still well below any of the ribbon of 50, 100, and 200 DMAs. I'm thinking we'll probably get to the 50, maybe get a bit higher. I'm not looking for a high retest on here. But what I would say is that it was interesting that we had this move here was so close to this low here and this low here. That was interesting. I haven't managed to work it up into a pattern yet, but it was certainly interesting. So I'm still looking at that, but I am wondering if we could see a breakup, which could take us up finally into a retest of this high here at 42.4. We shall see. All right, great. Let's have a look at the DX chart. Okay, DX, we've been seeing a bit of a rally here. This could be an IHS forming, but I have some doubts. We will see. In terms of ZB, we've gone a bit higher here, and I'm wondering whether we might be done. But that's not because of anything on this chart. I've got the trend line drawn a little higher here, but I am wondering about that because of the TNX chart, which we're going to be coming to in a minute. Okay, let's have a look at US dollar. US dollar, I did think we had some positive divergence here, but I've carefully measured it today and we lost it. We do not have a buy signal here on the daily chart. In terms of going up, we could be forming an IHS here, but I have to say it was that divergence which was leading me to think that we might see more upside. We'll see how it goes. I would say though, that we do have a very nice looking bull flag here, and I drew this in months ago after we made this high here, and we made it pretty much exactly. This is potential bull flag support, but what I am thinking is, in the event that we are going to see a significant move up in US dollar, which is very much open to question here, but in the event we are going to see that, I'd be thinking in terms of a rally here, a retest of the low, set up positive divergence, and maybe test this rising megaphone support trend line, which I've still got down just over 96. I'm not necessarily thinking the story is done to the upside, even if this bull flag is the correct read and it's going to hold and go up afterwards. I'm still thinking this is still very, very much a target, and these things can take a while. So I'll be watching that with great interest. I'm just going to check out over into the bigger picture charts. I've been working up a lot of these charts too. I haven't finished with them, but here on Euro, you can see we're breaking up. Could be an overall bear flag here too. Haven't quite made it to resistance, but I'm thinking there's talk of going considerably higher here. Could we go considerably higher here? Yes. This is a potential part formed inverted head and shoulders or double bottom, but it's not. It's more interesting than actually really compelling. In terms of the bigger picture chart here, this is obviously a breakup out of this very long range. We'll see how that goes. GBP USD, we've got a very nice looking potential IHS or double bottom setup here too. And that is pretty solid. If we see a sustained breakup over 1.425, this could go a lot higher. And I would say that we've also got a falling wedge here, which is broken up, back tested. I'm liking the upside here, no question about it. On the weekly chart, no current divergence, but you can see, it's a nice view of how nice this potential bottoming pattern that we're seeing form here is. In terms of the daily chart, no current negative divergence. We could set that up with a retest of this high, but I am expecting to see at least a retest of this high here at 1.3434, and we haven't seen that yet. Could that be a double top when we reach it? Yes, but on the bigger picture, I'm doubtful about that being the case. Okay, looking at USD/JPY, I've got this very nice on the monthly, because actually these patterns, this is going back into the early 80s. This is looking really good. This is a lovely rising megaphone. The next obvious target within the megaphone is 115, and of course USD/JPY and USD CAD are the ones which are generally looked at in the way where they correlate positively with the US dollar, because it's USD JPY, not JPY USD. I used to prefer looking at JPY USD because it seemed to make more sense to me, as that's the way you look at, most practically all of the other currencies. But these ones I switched over because that's the way the market looks at it. But looking at that, is this supportive of the dollar going down further? Yes, yeah, it is. Significantly, and in the not too distant future. This is a potential topping setup here. It's actually not a bad looking head and shoulders. I haven't drawn that in here, but I'm wondering about it. It's looking at the daily chart. I have drawn it in here, or at least I've drawn the smaller one in here, which I was thinking might form. This is the larger one, and we haven't broken down for it yet. But let me just show you what that would look like. Hang on, wait a second. That would look like this. That is a large head and shoulder pattern. It's a little heavy on the right shoulder, but it's not disproportionate. And that breaks down. That would have a target on here, which would be down in the, what would that be? That would be down in about the 117 area. And if we have a look back at the bigger picture chart on the weekly, that would be down here, basically at this support trend line. So actually, I'm really liking that setup. It's nice. I'm thinking the dollar could see a big breakdown soon. I think the new US administration has been doing a lot to undermine it, and I think actually it's stated a couple of times that's what they'd like to see. I think they may get their wish, even if they don't still want it. USD CAD. This is a nice looking huge double top. If this were to break down and make a target, and it hasn't obviously broken down below this rising support yet, but if we were, I put that in basically as a signal that we might be playing out on this. So I've got that support here in about the 131 area. If we see a sustained breakdown from this 120.05, then this could actually take the it would actually take the Canadian dollar back to where it was in 2007. That would be a big move. That would be a really big move, and I'm wondering if we might see that too. And it's a very nice setup. We'll see. Looking at the USD CAD in the short term, we've got an RSI 5 buy signal fixed, a little bit of divergence, but nothing to write home about. On the RSI 14, I am thinking we'll probably see a bit of a rally here, and that backs up the rally on the dollar, but I'm thinking afterwards it's a pretty good setup to go down. All right, looking at Australian dollar, less of a strong preference here on the bigger picture. I've got a nice looking falling channel here, which hasn't broken up yet. In terms of the daily chart, possible double bottom here, but I have to say, as a bottoming setup, this is a mess. Until you look at this scale here, which the double bottom resistance or IHS neckline at 0.7158. If we were to see that, then yeah, that could break up towards 801, and this could be part of a larger possible IHS forming. We'll see. But the reality is, none of it is enough of such a high quality that I'm really looking at it as something I'm really watching. In terms of NZ, seeing a slight break up over this declining resistance. Don't really see anything much to write home about here on the bigger picture. Not too much of a surprise, as this does tend to trade quite a lot of the time with the Australian dollar. In terms of is there a double bottom here? Yes, actually I've marked in the trend line at the wrong place. I've actually got the target for this up here at about the 61.25 to 61.50 area. We'll see whether it makes it. Okay, let's have a look at bonds. Now, on the bigger picture, I am wondering about inverted head shoulders forming. I've posted those charts a few times. On the short term, this is the 60-minute chart. We saw this big move up as I think a lot of foreign ex-friends were selling treasuries. And this was credited with being the reason why Trump turned around on the tariffs and actually delayed a load of them. Since then, we've been forming what I expected to be a bull flag. Do we have a bull flag here? Yes, and it is a beauty. It's a lovely falling wedge here. And if this holds, then we're going to see a break up towards a retest at 45.92 soon. And then we may well find ourselves well on the way back to the retest of this high here at 49.97. If we see that, then we're in the big inflection point that I've been talking about, and we could see if we see a larger bonds crisis develop, then we could see a rapid move up in interest rates up into the 8 or 9% area. We will see how that goes. All right, let's have a look at CL. CL, we've seen an IHS break up towards 70. It's not really been making any progress there. And I have mentioned quite a few times over the years that when you see a pattern like this break, you quite often see a head and shoulder pattern form in the other direction. And we got one of those here, watching that with great interest. But if we see a breakdown from here and it makes the target, which is down here at about the 57 area, that would fail this IHS and set up another target and retest this low here at 54.5. How do I feel about that on the big picture? Well, as I said, I think US may well be going into recession. I think we're looking at a reduction in overall world demand. What does that generally do to energy prices? Generally sends them down. I'm thinking we may well see a retest of that 54.5 and it could go lower. We will see how that goes. But it wouldn't surprise me to see this break down. But until it breaks down, I'm still watching, obviously, and still leaving in there the possibility that it might head up towards 70. And I do have more to say about this on the bigger picture charts. NG, this wedge I drew in here has broken up. Watching to see if we get much of a retrace. I would say we have a 60-minute buy signal, but that's already reached the possible near miss target. So watching this with interest at the moment, I'm not seeing anything suggesting that any reversal pattern of size might be forming here. We'll see whether that continues to be the case, but I am thinking on the bigger picture, we may well be seeing a significant breakdown on NG, although we have made the initial double top target. So we shall see. Let's have a look at that on the bigger picture chart. Okay. CL, looking at WTIC, I am wondering about this perfect channel that I found this weekend. I tend to explore on my charts and play around with the existing patterns and see if I can get better ones. And this sprang out to the eye from me from the CL chart. This is a perfect falling channel. Now, if this falling channel continues to develop, the next obvious target here would be this channel resistance, which is currently in the 78 area. Now, I'm a little skeptical about that, given the overall energy situation I think we're looking at, but nonetheless, it is a perfect channel until something like this needs to be respected until we see it break below it. So I'm watching that with interest. So I've redrawn quite a lot of these charts. Having said that, I would say I'm not entirely sure about these figures here. I had to redraw the bigger picture chart here because this chart here was showing us 134 for a long time, and actually that changed last week. So I'm wondering if that might come back next week. So I'm wondering about that. And here I changed it as well this weekend, but again, that wasn't what it had been showing before. That doesn't matter so much on the smaller picture chart because that doesn't come from 134 anyway. But I have to say that makes me wonder about the WTIC numbers here, which have generally been very reliable and haven't jumped around like this before. But nonetheless, short term, nice looking channel. And unless that breaks, then the obvious next target within the channel would be here at 77. Looking at natural gas, we have a very nice looking double bottom, which is broken up with the target in the 575 area, basically to the 625 area, and that may well be failing. Now, we're testing the monthly middle band at the moment. I've got that at 2.8. If that breaks, then we may well start heading back towards a retest of this low here at 154, because this double bottom, which had broken up and made some significant progress, may well at that stage be failing. Now, of course, energy, the same things I said about oil apply to natural gas, and with declining demand, for energy, of course, energy prices tend to go down. So I am wondering about this reversal all the way back, and I'm wondering about this double bottom failing. In terms of patterns, though, I had a nice looking double top here. That's already made target. What I am thinking is the next obvious target would be this trendline support in the 2.3 area, and if that broke, this whole thing could be a bear flag. Would it be too large to be a bear flag? Actually, no, it wouldn't. So actually, just let me check a trend line here. But actually, no, it wouldn't at all. And we've now got a monthly RSI 5 sell signal trying to fix. And if this doesn't make a big rally before the end of the month, it will have fixed. Again, that will be a signal that's breaking down. Do I have a nice trend line there, which I was just looking at? No, I don't. But this could well be a fail. If so, this may be a rejection back into the lows to form what might well be a larger double bottom and one more appropriately sized to do a larger retracement. We will see. But this has been very, very bearish tape, and we're doing a lot of technical damage. We've now got an RSI 5 sell signal that may fix on Wednesday night. Do we have anything really on the weekly chart? But it's not looking great. We will see. Okay, let's have a look at the metals charts. Now, GC, I am wondering about the setup for a possible larger retracement here. So let's have a look at that. We do have a head and shoulders that's broken down here, and that hasn't failed yet, and it won't fail until we see a break up into, well, almost to 3,400, where this right shoulder high is. Could we be forming a larger one here? Potentially. But I'm not going to take that seriously or draw in the lines for it until we get a lot closer to this where the neckline is at 3250. Do we have any divergence here? Well, not really. Certainly not on the hourly chart. SI, I'm still liking the upside here. We do have a little rising wedge here. It's quite nice. I'm thinking we might deliver a bit of retracement. Bigger picture, though, I'm still leaning bullish. I've done quite a lot of work on palladium and platinum this week, so we'll talk about that. But in the short term, I've got a head and shoulders, which is broken down. Looks like a bear flag forming, and the next obvious target would be down in this rising support in about the 905 area. No current divergence worth the mention. Looking at platinum, we had a double top that broke down here, and we've seen a reversal back almost to the highs, but not quite. I think it's got unfinished business that'll retest this high, and then when we get there, it could be the second high of a larger double top. HG, we've got a nice looking rising wedge here. We've broken down. That looks like a flag. This looks though it's setting up a retest of this high here just under 5. So waiting to see if we actually get that. Okay, let's have a look at those on the bigger picture charts. And looking at the gold charts, we've got a very old RSI 14 sell signal here, but we haven't really got anything more local. We've still got a couple of nice looking patterns here. We'll see how that goes. On the weekly chart, we've got a possible RSI 5 sell signal brewing, but it would need a significant decline to actually fix. On the monthly chart, we've got a possible RSI 5 sell signal brewing as well. On both of those, we had possible RSI 14 sell signals brewing, and they broke up through both. I don't have any obvious trendline resistance here, but obviously the next significant high would start to give me something to work with there. Looking at silver, I'm still looking at a potential target up in the 38 area. No current divergence. We've got an old RSI 14 sell signal fixed, but I'm not really taking it particularly seriously at this stage. On the weekly chart, no current divergence. Again, looking at that target in the 38 area, although we do have some resistance up here in the 36 area. On the daily chart, no current divergence, and I've got at what is actually a very nice looking bull flag here. That's a bull flag channel. It's nice, and the flag resistance would be up here at about 34.5 area. I'm thinking we get up to there, and if we can break through it, we'll then get a retest of 34.86, and at that stage, we might be looking at a run towards my targets in the 38 area. Looking at palladium, not a lot on the monthly chart, but since Wednesday, I've actually done the weekly chart. We already had a double bottom which broke up here. This has actually cast quite a lot of light on. You often find the weekly charts are the better ones. But we had a double bottom, it broke up, and at the moment it looks like it's failing. I've been mentioning that this chart would look better with a retest of 808, and now I'm thinking it would look a lot better, and I've actually got a target back at 0808 on the failure of this double bottom, which at the moment, at the very least, is looking extremely unwell. We will see. No current divergence here, so looking at the daily chart, no current divergence. Am I still wondering about 808? More than ever, now that I've done the weekly chart. On platinum, because I'm seeing this very long consolidation here, I'm keeping an open mind on that. On the weekly chart, it's all about the triangle. Where would this triangle normally look at? Actually, it would generally look down. The next obvious target within the triangle would be triangle resistance within, currently in the 1080 area. But generally speaking, a triangle is a continuation pattern. And where is it continuing from? Here. So I am wondering about more downside here. Again, I've been talking about this as a potential store of value, but apart from being a store of value, is also an industrial metal, which doesn't tend to do that well in situations of declining demand. This is the close-up on this setup here. We will see. We will see. The next obvious target within this, though, I would note, with this this setup, which is a possible triangle. If it is a triangle and a classical triangle, then the next obvious target would be this support here, currently in the 867 area. Okay, actually, is that right? Yes, that is. Okay, looking at copper. Copper, I'm looking at a potential level top here, a sustained break below this support here, which I've got in about the 3.9 area, would have targets down here in about the 2.5 to 2.6 and change area. I like this setup, and it's pretty nice, actually. So we will see. Looking at the bigger picture chart, that's a nice trend line setup. We had a nice 3-touch trend line here, which broke, retested the high, and this is a classic way for a double top to form. Daily chart, no current divergence. I haven't drawn it quite the same way on here, but really, it's that's where we are, and we will see whether we're going to break down from that. If we're going to see a fall off in demand, then that would be a great time to see that. Dr. Copper, of course, is very, very sensitive to demand. Okay, looking at GDX on the weekly chart, got a possible trend line it's failing out here. On the daily chart, we've got an old RSI 14 sell signal, which almost fell, but not quite. I'm not sure how seriously I'm taking that, but we've got some decent trend line resistance here. I am wondering about some more retracement, and I'm thinking we may well get it. We've got some nice resistance trend lines. Actually, we've got those on GDXJ as well. They're really not bad. I'm thinking this may be a signal that we're about to see more retracement. You can see we've got a potential little head and shoulders forming here. I am wondering about a move down on metals here. We will see. So do we have an obvious topping pattern here on GDX? Not particularly, no, but you can see we're testing the hell out of this breakaway gap. If these breakaway gaps get filled, then I'm thinking we may well see more downside. And it's been a while since we had a decent retracement on metals. Okay, let's have a look at the commodities charts. Okay, KC. KC has broken up from the long flag, and I'm expecting to see a retest of this high here at 416. Well, 417, more or less. Been looking at this for a while. You can see how long this flag took to form. This is a 3-month chart. So happy to see that. When we see that, I'm wondering if that's going to be the second high of a double top. Looking at sugar, still looks like a bear flag forming. We'll see how that goes. On corn, sorry, on cocoa, we've broken up for a double bottom with a target in the 11,350 area, and I'm thinking that might make it. No current divergence suggesting we won't. On CT, we've seen a retest of this high here, and we're setting up a potential level top here. I've marked in the support, sustained break below about the 78 area. Sorry, 68 area would be looking for target, which would be at about the 66.25 area. So we will see how that goes. All right, looking at lumber, still a potential level top here. Sorry, double bottom here. Looking at ZW, I was talking about a retest of this low here. Having worked out the weekly charts on the grains this week, I'm not so sure about that. I've got something to show you there. On corn, looks like a bull flag forming. Less so than it did, but still. And we could be looking at a reversal here on soy. I've been slightly mystified about how well soy's been doing, given how much of the American soy crop gets sold to the Chinese, but we will see. Okay, looking at live cattle, we've made a higher high here, nothing really suggesting this is about to come down, but if we retest this high and fail there, then we could set up a 60-minute sell signal and do a retracement on that. On lean hogs, we have nice looking rising wedge, breakdown, retest. This could be the second high of a double top, as and when we've made it, which we haven't quite yet. We will see. Okay, let's have a look at those on the bigger picture charts. Now, I've actually done a few more of these today. The bigger picture chart, the monthly chart, is just showing us how very high this is by historical standards. Having said that, of course, these are prices which are not accounting for inflation. So really, these highs here, and probably here were higher than we've got now. But nonetheless, we are at the kind of level where I'd be looking for a high. If we retest this high, then we could set up some nice negative divergence on the monthly chart, and we could set up a nice looking double top. And when we've had these big spikes in the past, we tend to see very serious retracements afterwards. How far do these go? 3.4 to 0.855. 2.7 to 0.481, 3.18 to 0.415, 3.062 down to 0.863. These are the kind of moves you see on crypto. So if we're going to be looking at that here, you do not want to be long at this retest here. Chances are it's going down, or at least it's an unacceptably high risk. On the weekly chart, we could set up again with a retest of the high. We could set up some very nice RSI 14 negative divergence, and we've really got nothing from a pattern setup suggesting this might need to go higher. Daily chart, we could set up some nice negative divergence as well, possibly on both RSI 14 and RSI 5. Nice clear flag here, nice clear break up. Looking at sugar. Sugar, I'm still concerned about this bigger picture chart, because this is the monthly chart. And this is the monthly chart going back to about 2002. And this is a very nice looking head and shoulders, which is suggesting that we might see a move down quite a long way on sugar. So no current divergence worth a mention, really. Monthly RSI 14 sell signal fixed. We've had one of these before on this 25-year chart, and that made target, but it's not really a statistical universe. I don't know how reliable they are yet. I'd have more confidence in the RSI 5 one. Looking at the weekly chart, no current divergence, but I've drawn in the bigger picture head and shoulders. We could be heading up here. This could be a little double bottom here, but I have to say the nicest pattern on the chart is the head and shoulders, which is trying to break down here. On the daily chart, we've got an RSI 5 buy signal fix. That's almost reached the possible near miss target. That kind of fits with the bear flag I'm looking at here, and this kind of looks like a bear flag here, so we shall see. Watching to see if we get a test of the daily middle band and what happens there. I've got that at 1833 as opposed to 1816, which was the close on Friday. Let's see how it goes. If you can get back over that, I'll have a look again. Otherwise, I'm kind of assuming bear flag at the moment. On cocoa, again, by historical standards, this is high. It's very high. Unfortunately, I don't have data going back much further than this, which is why the chart starts here. But really, we've seen a sizable decline, almost a halving from this high, actually, already. And I'm thinking we may well go down considerably more. In the short term, though, we have got a monthly RSI 14 sell signal fix. I'm thinking that's probably going to deliver more in due course. On the weekly chart, RSI 14 buy signal has reached the possible near miss target, which actually, yeah, it has more or less. We've since broken up over the declining resistance. I am wondering about more upside here, and we do have a decent looking double bottom on the front month. I think that was looking higher. It's it's on the front month, because obviously that's on the hourly chart. Looking less like a double top here. But nonetheless, I'm thinking this might well give us some more upside, at which point it would probably give us a better short. Looking at wheat, I've got on the weekly chart, you can see we've got a nice looking double bottom here. We've broken up from a falling wedge. Sorry, I've just only just done the weekly chart this weekend. But actually, this is actually not a bad looking bullish chart. I was leaning more short on it before, but actually this actually isn't a bad setup at all. So if this is going to break up, then a sustained break up over 720 would take us potentially a lot higher, up here over sort of 900 to 950 area, over a 50% retracement of the move, and these moves do like retracements. I'm quite liking the upside on this. So that has changed my view on this, because of course we don't really need to come back and retest this low here, because one, we've got a decent looking support trend line here, 1, 2, 3. A retest of 517.50 would need to break that. Two, this doesn't really look like the kind of setup where we should see a double bottom here, unless we were going to come back and retest this low here at 495.50. Maybe we'll see that, but that would be the target if we did see a breakdown. But I am thinking that we might see a break up instead. We'll see. Looking at corn, on the weekly chart, we've got a nice looking falling wedge again. That's broken up. And here we may be forming an inverted head and shoulders. On a sustained break up over 504, this would have a target in about the 725 area, no, 625 area. That would be up here, and that would be a pretty nice move. Slightly over 50%. Again, nice Fibonacci move, nice pattern. Again, this looks a lot more bullish. Now that I've got the weekly chart on board. Daily chart, not so much. Holding some support, I guess, at the daily middle band at 472, but less nothing as definite or as promising as the weekly chart. Looking at soybeans, soybeans on the weekly chart, we've got a falling wedge here. We've got an obvious next target within that falling wedge in the 1100 area, and we've got an obvious bull flag here, which I think switching over to the daily chart. Yeah, looking at the daily chart, the next obvious target will be down here in the 960 area. The question, sorry, next 965 area. The question is why we haven't seen that already, because I'm not quite sure where the demand on soybeans is coming from. We'll see. But I'm leaning towards this making it next, and then very possibly making it up towards falling wedge resistance. Could this be a potential level bottom if we go back here and retest 936? Yes, and I'm still wondering if we might do that. And really on soybeans, I'm kind of wondering why we're not doing that already. We'll see how that develops. On cotton, we've again got a falling wedge here. This is a bullish underthrow, nice looking trend lines here. The obvious next target is actually this trend line resistance up here in the 75 area, which is also basically slightly above double bottom resistance. If we see a sustained break up over 75, we could see a very, very nice move up into about the 91 area. So that would be pretty sweet. And again, if this wedge breaks up, which it hasn't yet, then I'd be looking for some kind of Fibonacci bottoming pattern and Fibonacci retracement. And this wouldn't provide that, but it might be a stepping stone on the way to one. All right, looking at cotton on the daily. Nothing much on the daily. I'm now going to be using the weekly chart as my main reference. Lumber, just the monthly chart just showing that this is still fairly richly valued by historical standards, even if we've come down a lot since the COVID spikes. What are we looking at on the weekly chart? Well, we've got a falling wedge here that's broken up. What are we forming here? It's not clear. This could be a bear flag forming. This could be an IHS forming. Although ideally, if we were going to do that, we would go up to 900 next, and then do a retracement to 600. At the moment, this is without form. We're waiting for more significant highs or a test of the support trend line. But even if we had a test of the support trend line, got 3 touches there, it's not entirely clear. I've had a close look. I'm not that clear on where the resistance trend line would be. So waiting for more developments on this. No current divergence. On the bigger picture chart, though, I would note that we've got a little double top here, which is broken down and hasn't made target yet. I've got the target for that at about the 512 to 522 area, and I'm leaning towards that being made next. We'll see how that develops. So if we do see that, that wouldn't get us back close to this rising support trend line, which I'm not really seeing as a target. For what it's worth, that's currently in about the 450 area. Okay, great. In that case, I think that's a wrap. Everyone take care, and I'll catch you guys again on Wednesday. All right, take care.